Thank you.
Now, when the year came to a close in 2009, retail activity in the market had almost dried up, leaving only foreign investors, institutional investors taking part at the markets. And now, are we likely to see the retailers coming back on board?
Yeah, thank you. First of all, we began the year with some good hopes. First of all, we began the year 3,200, now 3,300. So there's so much to look for this year. With a focus of 3.2% GDP growth, I think there's more to be expected in the market. So we're expecting the retailers to come back, probably not so much in the first month or so, because normally they are behind the market. The market has to pick up. Well, by the time we get to 3,500, then you're going to see a lot of activity coming from that end.
What particular stocks are likely to attract the local investors, and what fundamental reasons could they be looking at?
I think most of the investors are going to be driven by the earnings that are going to be coming through in this first quarter from the end of year accounts. And the key counters to watch here, we are looking at the banking sector, the telecommunication, as well as the manufacturing. We're looking at BAT, EABL. And I think depending on how the performance is, there's going to be so much rallies in those particular counters, given that we're expecting some good results coming through. And
how about the foreign investors? Which stocks are likely to be the draw cards for them?
As usual, I think the blue chips are very stable companies, BAT, EABL. We're looking at Safaricom, probably Equity, KCB. We are Access Kenya. We have been playing so much in the last like 24 months. I think going forward, those particular sectors which have been very active, they're going to be more active given that the economy is picking up. And I'm seeing the same ones coming for them.
As we came to the end of the year, we saw the agricultural stocks, specifically tea, take on very strong action. And I was looking at a report by Mana Capital earlier, but there seems to be huge discrepancies in the earnings for some of the companies. Say Williamson, for example, which was up 159%, that's for 2009, Kakuzi 38%, Kapchorwa 26%. These are huge discrepancies with companies dealing in the same kind of business. Is there hope that for the other counters such as Kakuzi and Kapchorwa will gain the same as we saw with Williamson?
First of all, yeah, they will, no doubt. But first of all, the supply chain management for those companies are very different. If you look at Kapchorwa, probably maybe Williamson tea, they are much more focusing on selling their tea out there in the market in Europe, most likely. If you look at Sassini, if you look at the other companies, they're looking to sell their teas just across the region. So in terms of the turnovers, in terms of the efficiency on the prices, they're very different. So you'll see in the same industry, someone makes 100 and plus performance and the other person does just little. And I think going forward, we are going to see most of these stocks going up on the agricultural sector, because I think across the sector, with the rains that I've had, I think prices are going to improve all across. And they're going to pick up.